Welcome everybody. I want to make that exciting because you get a lot of detailed information today on the presenters you had. I want to go into a presentation where I show you instruments and measures of how you can trade more frequently and how you can trade with the big money. They are basically our best friends, the big money, and so therefore we're going to definitely take advantage of that. And let's go ahead and introduce myself here. Here you see my picture. My name is Barmann. On the right side here, the legal disclaimer, so that I'm not giving trading advice, that I developed systems that I'm using myself, and I'm teaching how you can use those systems to your benefits by following institutional money moves. That brings us to the topic. When we see at the trading, always we look at supply and demand patterns. That's what trading is about, yeah? And the key question is, who swings the lever, yeah? So why do prices go up and down by supply and demand? The lever is moved by institutions. Big institutional investors, they really swing the markets. And who can swing with the lever? That's you and I. We are private investors. We are small. Therefore, I wrote in the presentation that our size is a big advantage because, you know, size and speed. We can go in and out of entire positions all at once without changing the market. This is what institutions cannot do. And there's our big advantage. Now I go through showing you step by step how you can apply it in your trading, and I'll also show you some of the ideas of how NeverLoss trading incorporated all of that in a full conclusive concepts that we teach in mentorships. Take a look here on the left side. You see that big building. Who can that be? Yes, our fellow investors, Goldman Sachs. Yeah, and what are those? Those are typical prop traders. Yeah, so you find them here in that first category here. Prop traders. These are the people leading the markets. They have the smart money, so to speak. They do all the analytics. Who could be the next mover in that segment? They work all these out, but they also work, on the other hand, usually as liquidity providers, yeah, which we know also as market makers, but there are a couple of others like ECNs or wholesalers, and all those institutions together, they swing the key markets. Those are usually the leaders. They are the adjusters, the gatekeepers, and they are the followers. And we want to be part of the followers. We want to recognize when either prop traders try to make a swing or invest into an asset, and that is on all time frames, or if liquidity providers try to better their position either on the way up or on the way down, and we want to jump on that and go with it. And it's a really nice advantage we have as over institutional investors. We can do it with entire positions. Look, for a private investor, if we ever trade on the ES, yeah, the S&P E-mini, 100 contracts, that's huge. That is nothing when you see the volume that goes through minute by minute. And so with whatever, when you trade 1,000 Apple, that is nothing. Yeah, you don't change the market by it. And that's our big advantage. We don't change the market, we move ahead. We can be wonderfully engaged in these markets, following institutional money moves, and go in quicker than they and go out quicker than they before they leave that platform. So let's look at the next chart. You see it goes through all markets, stock markets, currency markets, treasury markets, commodities. Mostly the markets are driven by the prop traders because, you know, they figure out, yeah, what's going on with crude oil, and that's an important one. What's going on with crude oil in respect to the entire market? How much will that take the influence of ExxonMobil on their profitability? They work that all fine. And you see on the chart their appraisal. The news might say something different, but the action in the market, the price change if institutions buy or sell those assets is easily visible, and we can make it visible for us and take advantage of it. Yeah? And so the advantage is with institutions, the crowd follows the leaders. The crowd are often what I showed up there, fund managers. Yeah, that's on the one side ETFs, but that's also in particular mutual funds. Yeah, all the 401k accounts are with mutual funds. And pension funds. Yeah, don't say we don't have pension funds in the U.S. anymore. Yeah, that's true, but there's a lot of foreign pension funds invested in the U.S. The biggest foreign pension fund, or the biggest pension fund in the U.S. invested, is the Japanese Postal Worker Fund, number 2 Norwegian pension fund. So there's big funds on all ends, and they're following the lead of those prop traders and the action of those market makers. And sometimes prop traders, they play it on both sides, and we can make it visible. We can be part of it, we can follow faster, and we can follow smarter by going in and out with entire positions. Because what are our chances? Yeah, our chances to find the direction, and we could do fundamental trading. And I did that too through my 30 years of trading. I tried out everything because, you know, in when you go back into the first 10 years, there was no data set available. Yeah? Data was very hard to get, so you learned that tape reading, 86.5, 86.5, 86.75, a half, and then you started trading with the flow, and that was all we had, but that's not good. With the help of computers and everything available, we can move from fundamental trading into technical trading and trying to get along with indicators, finding and catch the wave where institutions go in and out. Yeah, where the supply and demand pattern lead to a price move. And we can even calculate how far that price move most likely will go. And I show you a couple of little calculations. So bear always with me on the calculations. They will never use more than fourth grade math. They're not complicated, but they're essential. They're essential in your today's trading system. They're essential when you want to work with NeverLoss trading. Yeah, so let's go in and we move a little and we go into a couple of details of indicator-based systems. Basically, there's three types of indicator-based systems. One is moving average-based. Yeah, you see also here just to put two moving averages on the price chart, a 9 and an 18. People then say where they cross, you can trade. Yeah, but it's critical, yeah, because a couple of times when they cross to the wrong side, it does not always work. However, they have a positive expectation, and I'll come to that. Next, you have prediction-based systems like Elliott wave, cup and handle, head and shoulders. So we get predictive-based system. One action follows another, and within that an assumption for the price direction is made. And then finally the newer systems, the quant-based systems, activity-based systems. So somebody does something right now, and what is used is a Markov chain, and within that, in a smaller comprehension, another course of action will take place. So you see here on the chart, that's one of the NeverLoss trading charts. Oops, let me go back, it jumped ahead of the curve. You see then here, at this point, you have the purple signal, a target got formulated, boom, the target gets hit, you're out of the trade. Reverse target, hit, out of the trade. Yeah, and so again, hit, out of the trade. So you trade much shorter increments because you don't assume that the direction goes forever, but you know at certain focal points where institutions made an engagement, followers will follow, so you follow quicker in because you can buy an entire position right at once, and you are quicker on your way out. So both sides you have advantages if you can spot where institutions make a change. And you see here on the graph there's a couple of indicators helping you, like the red line. Where's my stop? Yeah, on the way up it's there. On the way down it's there. So you always know where's my stop for the trade, and we'll go into odds calculation. You can do the odd calculation for all of these systems. I work with all of them, and I share some of the results that came over my 30 years in that business. Yeah, as a private investor always. Yeah, so some examples. So what are your probabilities and your expectations? Yeah, if you run with a moving average-based system, your probabilities, and what are they? MACDs, Bollinger Bands, stochastic RSI, and typical moving average crossings. They are a little less expensive on the way in if you want to learn them. And so here's about their profitability. Or probability, not profitability. 54% of the time. Now, right, it's a positive expectation. Nothing wrong with that. Or you have prediction-based systems. They range like Elliott wave, Gantt square, trade patterns, head and shoulders, reverse head and shoulders, cup and handle, all of that. So they make a conclusion. D follows ABC, and within that goes in. So by our studies, we have an average coming to 55% probability. So those are lower probabilities, and through the years we worked out with quant concepts that said, okay, we'll need to get to higher base. And NeverLoss trading is not the only activity-based system, but it's one of the newer ones available for you as a private investor, because with the other systems you usually don't obtain the software, so you have to pay license fees all the time, and you're totally dependent. You don't pay it a year, you don't own it. Here you get the software, you purchase it with your initial purchase, you have it forever. It runs on a free platform so that you have a free data feed, so you don't pay for your data feed. Yeah? So, and here we work usually above 65, and here for the calculation purposes of this presentation I use 66, 67%, winning 2 out of 3 trades, and I'll show you in detail what that will mean for your trading. Here a little sidestep, how do you evaluate the system where you are at? Yeah, so how well you're doing with what you're using. Just backtest 100 trades, take 100 trades or whatever, backtest them, how many winners, how many losers. So what I postulated up front was like most systems are like 53, 47, and just you have to be with hard ins, hard outs, evaluate them and 10 forward, and then you know one key thing, okay, this is about of how my system performs on predictability, and what do I want to do with that? I formulate you a golden rule. Regardless of what system you use after you did that, yeah, and I propose to you to use a high probability system, and you will see in calculation that really will make a difference for you. The probability of a trade setup, yeah, out of past performance times the reward, so how much am I trading for, divided by the risk and the probability of failing, yeah, is 1 minus the probability of winning. So and if that factor is above 1.5, start trading. If it's below 1.5, you most likely either trade water or you lose. So write that down here, the little formula, one way or the other. Apply it for the system or learn NeverLoss trading, where we constantly work with it in the background. You don't even need to think about it. Computers spit that out. This is why we have them. Yeah, humans are smartest, but computers are really faster in getting those numbers here together for us. An example, yeah? If you trade with a 65% setup, I put it on the lower side, yeah? And you trade $1 for $1, the calculated factor, yeah, if you do that, 65 times 1, 65% times 1 divided by 35% times 1, then you come out with a ratio of 1.85, and you're good. You're above 1.5, you're good to trade. So you use a lower probability system, and I put here 58%, like on some of those concepts that I just shared. You trade $1 for $1, you add 1.38. That's no good. So what are your chances? Yeah, so your chances are either you change to a higher probability system, or you need to find trade setups that have a higher expectation, but also that has a consequence. A consequence is when you trade for a longer price move, you are longer in the trade, yeah, as the words say. So for example, if you find bigger than 1-to-1 risk-reward setups, you're usually in a trade 10 to 50 bars. I take an average of 20 here for our calculations. If you use a high probability trading system and you trade 1-for-1, yeah, just a 1-for-1, you're usually in 1 to 5 bars, and I put a mean value of 4 bars in there. So let's do one thing now, and we say everything's defined by risk. And in a trade, we want to risk $1,000. Yeah, I'm just saying that the risk of the trade is $1,000 that we take. If we find a 2-to-1 setup, our gain will be 2,000. Yeah, 2 times the risk. A 3-to-1 setup will be 3,000. Or I take a 1-to-1 setup. Now, the average time in a bar, in a trade was 20 bars on the first two. I just took those and said, okay, it takes 20 bars to come home and get me on a 3-to-1, or it takes 4 bars in average. Yeah, and those are proven figures. So here we take the 55%, and here we take a 67%, and we analyze 240 bars, like a year basically of trading. Or if you take a lower time frame, then to take it whatever base you have, so you have 240 trading hours, yeah, divided by 8, and you know how much you're trading. So how many turns do we make? So here we make 12 turns of our money. Here we make 60. Yeah. Winning trades, we would have 6.6. Here we do 40. Losing trades, 5.4. Here we do 19.8. By 240, the numbers don't totally round, and I didn't let them round. But what does it mean in our expected return? The first two systems where you looked for the big run and you invested multiple bars in it, they give you about a $2,400 or $3,600 expectation on a return for your $1,000 risk. And the high probability trading system with constant reinvestment without compounding interest, that's also, I didn't compound interest in here, gives you a $20,000 expectation, which is 8 times higher than the 2-to-1 setups and 5 times higher than the 1.5 setups. But why do so many private investors strive for the moon? Because it looks so good if the thing progresses forever. But markets are not made like that, that they progress forever. They always have retracements, because at certain points institutions gonna put an edge and get out of it, and then usually stops are taken. So therefore, trading for smaller increments, dollar for dollar, with a high probability system is giving you a high rate of expectation. So think about your trading. If you're aiming for the moon, you're aiming for the moon in a long journey. You first have to get it right, and if you get it right, in average you'll make less money than you're aiming for shorter targets, as long as the risk-reward is in meaningful correlation and you're making 5 to 8 times the return. Most likely you haven't thought of this one, but we'll work deeper. We'll work ourselves deeper into this. So we'll look at price ranges, yeah, and what that means, because a couple of people then say, yeah, listen, I'll take a very, very tiny little stop and I work with it. But we worked out, for example, in your price ranges with our indicators, this red-blue indicator around it, give the price the wiggle room it deserves to bring it home. So for example here, that's a new concept that we just today launched. It's just finished. It's our swing point concept. So you see at crucial swing points, there that indicator says swing because the institutions make an up or down swing, and you can go with these swings to the up or down side, and there's always a dot for the first target on it, or there's other lines that help you to find the direction for longer hits on those swing points. But what we have to give the trade is the adequate wiggle room to not get stopped out on the journey, and that's the red line. And with the help of the red line and the target, you puzzle together your risk-reward scenario, let the computer do it, so that you know that you are in a favorable trade. Yeah, you remember our 1.5 golden rule of that odds ratio that I showed you at the beginning? Note that down. It's really needed, because when you trade like that, the odds of you coming out clean and making money are high. Yeah, so you need a wiggle room. But often happens, private investors say, I don't give it a wiggle room, I trade for $1, give it 10 cents. But what will happen if 10 cents, you'll get usually stopped all the time. Yeah, oops. Yeah, so here, well, you get stopped. You produce a chain of basically short win, short loss, or short, yeah, and then comes the win in. Within the calculation of going forward with a one-on-one, you'll make a 3 to 4 times more return. Unfortunately, somehow here that is hidden, it doesn't come on the chart, but I'll show you what it means a little bit more in a magnified view. Yeah, so you see here there was a swing point. The goal was that yellow line here. Yeah, and you saw here we hit that yellow line and we were home. The next day, right opposite move. And then we'll go on here, then we got a swing point, we got our target here, we get our swing point to the upside, we got our target here, and here we got our swing point to the downside, first target here. So the help of those lines help you to guide where shall my stop be if I do a continuation trade, or if I do a momentum trade and trade short term, bang, bang, in and out, take a new opportunity all along the next day most likely after I exited my trade today. Then I'll use the ping pong of trying to trade right to the dot. Yeah. So what did we learn here? So first of all, takeaway: frequent trading has a higher return, 5 to 8 times. We saw that in the calculation. The odds have to be in your favor because we have to be with that odds ratio about 1.5, and we want to have an adequate stop by our analysis. The adequate stop is produced when you give the price the wiggle room, as you saw with the red line, and then you're making a 3 times higher return instead of giving the price very little room for expansion, because you continuously stopped all the time, and you might not take the next big opportunity, because when the price comes back for a little, there's a certain volatility that we expect, then you're out of the trade and the trade might commence in the direction that you desired. Yeah, so now we're looking at the trading system of how we can incorporate that and the reasons why, and how you can put it in your trading, or how you can make use of our trading system within being part of the NeverLoss Trading Society. Yeah, so here I'll formulate it a bit provocative: buy high and sell higher, sell low or cover lower. Yeah, this is what I want to show you. That's a way to trade short term with institutional money moves, because they're either instigated by the prop traders or by the liquidity providers. We see it on the chart and we'll take advantage of it. We always should have, and that's also a need for you, clearly defined entries. So we have a price threshold. If the price is above $100.03, we enter the trade. You have an exit that says at $103.05 we exit the trade. Our stop is at $99.75, for example. Yeah, out of that we know our reward, we know our risk, and you should know the probabilities. We had worked on that at the beginning, probabilities of every trading system. Does the trading system have 66, 67, 68% or higher? We have some that go up to 80. Or does the trading system have a 54% probability? In correlation to those numbers, it tells you then down the road what you want to invest. And how do we invest here, and how do we recommend to invest and be a smart private investor, when institutional leaders drive the price out of a certain range, it gets noticed by the market. All the computers of all the institutional investors notice it. With NeverLoss trading software, yours too. And you get an alert. Bang! Here is something going on with Google. So, holy macro, why with Google? Because it's on the chart. You will get it on the chart, you will get it on your watch lists, and you will get it through our reports saying something is going on with Google, for example. Let me jump out of the presentation right into a trading chart and show you this. Yeah. So here's Google. So here we notified something's going on with Google. Orange signal. Bang. There is the target. Did it go further? Yeah, but you know you find a Google every day. In the risk reward, not okay on this one because that is the target, still came to target, and this is how you take them. So very nice trade coming down, wonderful trade, and this is how the price threshold's gone on a target. You see here the last one. Let me magnify this. It says sell if the price of Google drops below 513.06. So at the 513, let's say, we'll enter in our trade and we know our exit, or we'll take it to the next day. How long were we in the trade? Just one single day. What was the return we made? We made about $8.64 or 1.8% return on cash. If you take 1.8% return on cash and you do it on margin, so it's a 3.2% return on cash just in one day. It works for futures, works for everything, and we use it for that, and we teach it, and also we teach in particular how to use it for options. Back to the presentation. So we are followers. The market makes a move. Clear price indications go on the chart. We recognize it. We'll go with the move. We define our out from the get-go, and we are out before the institution sell-off. Be in for a short moment, going with the flow. We're out again, and we do that continuously over. So you saw when I showed you the 240 days, we had 60 turns, while the trading concept with aiming for high targets had only 12 turns. Within that, we produced 5 to 8 times higher results. Yeah, within both systems coming out positive. And the same surely works on the way down. Yeah, so here you see on a different chart how it worked, and you see winning, losing trades. So you had here a concept, it is spelled out clearly. Here it's for an ETF, sell at that level, take the win. Yeah, so here you see on that chart alone we had 7 winners, 1 loser, and 1 trade that was still open at the point in time when we draw the chart. And that's high probability trading, and that program here also called high frequency trading because it gives you lots of trades. So people who want to trade a lot, have a lot of ability to trade, day trader, swing trader, or long-term investor. Yeah, but it gives you those opportunities. And again, we follow the leaders. Prop traders mostly make a motion, or market maker moves. Yeah, so those we are caught in that new Lime signal, the swing points. Market maker moves, we go with the move. We have a defined entry, we have a defined exit. We take the low-hanging fruits only when the odds are in our favor, and where we have the system that supports us to give us trades where the odds are in our favor, and then we trade along with it, frequently, constantly, doing the same over and over again. One of our inventions is a SPU. It's called speed unit. That is the expected price move after institutional engagement was observed per time unit observed. Sounds a little complicated, but this is the measure that helps us at every bar. It's different. How far at that bar will the price reach? So we're not using systems like Fibonacci or expectation. We'll list the computer out of the volatility and other parameters, clearly define a target, take the target, and then enter the next trade. Yeah, so the SPU also helps us then to define when an option is overpriced or underpriced or adequately priced, and gives you on the chart exactly what you buy. It ties in with our NeverLoss trading delta force option concept. Very powerful concept, very different from anything you most likely have heard. Yeah, so in here it's how it looks on the chart. That's a top line chart. So you see here that trade was risky. Yeah, so it had a big stop. So you see the red line was the stop, there was the target. So we were not so happy with it. It came to target, but had we taken it, it was a risky trade. Here we had a favorable trade, risk reward, because target is sitting right here. And here we had a favorable one again, where you see the risk reward to target. So we had 3 good trades in a row here on the motion, on, again, an ETF. Mostly we trade stocks, but ETFs, I put it on that one, is a little more challenging, but you see it works, yeah, and moves ahead. So then here on a day trading chart with the HF day trading indicators, you see here the dark green signal comes, brings you to target, and there come these quant lines. So with those lines, we know in advance for the entire week where key price turning points are, so where price will accumulate and fight, yeah, in particular where you see those dots. So this is where we trade towards, take our profits and run. That's easy. Taking profit never hurts. And here you saw a situation where you have a turning point. Those pink indicators say, oh wow, price turning point, so volatility based. There's something going on. You see they got these long sticks, but the computer helps us. There's a turning point. We take the buy signal, and then we get an opposite signal. Oh, sweating. Yeah, but you know, wasn't confirmed. Next day didn't go lower. Our stop wasn't taken. Stop was on the red line. So we commenced. We took a little longer in this day to come to target. Took here 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 bars. That's usually the most we trade for. 10 bars and we out. Yeah, but here after 10 bars, it came through. This one took 1, 2, 3, 4 bars, came to target. This one took 1 bar. So the average often that we are in a trade, you see an hourly chart is like 4 hours, 4 bars. Yes, very comfortable trading on hourly charts. How can you stay engaged? There's 40,000 stocks. If you want to trade that, you always need to find the one that moves. 3,500 ETFs, 200 futures, and 78 forex pairs. So we help, for example, our subscribers to stay engaged for the selected assets. If you use moving average based system, you need the scanner, you need to do your own analysis, or you need to subscribe to a service like we have it. And when somebody comes on for a mentorship, so that goes for free for the first 3 months, where we help within what is hot, what is tradable on different time frames or different instances. For example, every morning we usually do a pre-market mover scan. So what's hot in the morning in the pre-market, and then we jump on this one with a 10-minute chart if we want to take it. We do last hour movers, and we jump on that one with an hourly chart right at the opening. So there's different ways of trading, different ways of swinging with the level of the institutional investors, and we go very detailed. I don't want to waste up all the time here with that, very detailed in the analysis of how that all ties together, if it's favorable, approved, acceptable, what the trade setup is, so you get information on many different levels, how good your trade is appraised, what's your signal that gives it, and it goes even more detailed. Then it tells you your last price, your daily SPOO, you remember the speed unit, so it says, okay, when that thing goes forward, it gives you about $7 move and 6 cents, so there's a 3.9% return on your cash, yeah? The move is above the average, so there's the indicator constellation. 4.9 million shares were sold. The actual move was 4.5%, the big move that day. Yeah? And then it goes down the road and tells you, listen, if you want to trade that thing, your entry price is 184.72. What you do? A buy-stop limit order. Where does the buy-stop limit order go? Yeah, so you see your critical price threshold point right above this, and then bang, that's what you offer, and then you let your price go. So you can do that all pre-market or the night before, put the order in the market, and it's auto-executed when your price level is reached. And with the bracket order of an OCO, buy-stop order, you know where you exit, and you know, on the other hand, where your stop is. And so you saw here, oh, that thing is risky, so we'll be careful. Easily don't trade that. That's what we recommend. Don't trade them. Yeah, but you see, all that is appraised. Yeah, so it says even though it has a signal, all of this, it's a risky thing. You'll need to be looking at it, but when you saw before, it was approved, because here we can make an adjustment to the stop, therefore it went on. But it's not all risky, but there's also favorable trades and acceptable trades, and we also calculate for the option trade. So you see here good value, so everything was all right on that day with the option value, and what you want to pay for an option of around the 30-day point, the 20-day point, the 14-day points, and if that has a weekly option, which we use if we day trade. Yeah? So lots of information that one way or the other you need to acquire for your trading. Yeah? Because if you want to be in the markets making those returns, constantly trade, have adequate stops on them, have a system that you follow, then you need to know where the fish swim. Yeah, the fish finder, that's the idea, And some of our systems like Top Line, they come with a fish finder, so you have your own scanner. So you can hit the button at or the price increments you want to see, and you see which assets, if it's a future, if it's a forex pair, if it is a stock that is moving, and we also help you to define those stocks which have favorable option setups. Yeah, because not every stock that has options has favorable setups. Some have too wide spreads. Yeah, so either you can do that on your own, put it together as I showed you here, or you can rely on our expertise and move ahead with us. And that's also expertise feedback. If you trade on your own, it's very hard to always put everything together and get a feedback of how well you did, because look what's all on the chart. Yeah, so how do you read through this if you're not a totally experienced trader yet? And even so, if you are, you might miss a lot of things that help you and are for your benefit. So we'll help, and we recommend to you have a feedback system in place where either you yourself journal your trades, and within journaling your trades you get a feedback, or you take a coach, and that's what we do in our mentorship, and we work with you. We work on those trades till you get them right. Yeah, maybe you get them right from the get-go, but here are some of these examples where you see, okay, here a student followed the system. Yeah, you see all these buy-sell signals. Yeah, so all these buy signals, so you follow the buy signals. He did his entry stop, and so then he got a feedback on this one. This was well made in that case. Or if it was not well made, then we recommend how to do that trade differently, or keep your fingers off. Yeah, so you see on 2 instances, both times profit were made on different time frames and for different assets. Yeah, and next thing is position sizing. Position sizing all is related to risk. You'll need to know when to hit for the fences. We put that on the bottom, and when to not trade. So best is to put all these probability thinking that I shared with you prior and the odds ratio into a model that helps you putting that equation together, or you rely on NeverLoss trading. We'll do that for you. We give you those models that here appraise a situation for a stock where it says then here, trade 2 lots, and it did the same for the appropriate option that was picked, and it says, max half lot because that thing's risky. Would that help your trading? I hope. Either you put it together by your knowledge that you gain today on your own, or you can rely on a system ready-made for you to go ahead. So here comes again, so that's where we are. We follow a system. We have a feedback system in place. We have alerts, and now we know position sizing. All of this is needed. All of this is needed to bring you as a private investor into the zone. And so you have 2 chances on your own, or you go with one of our solutions that we provide to you. And we always teach individually. So you're not going to be in a class with many people because you know the one trades Apple stock, the next the ES, the next one wants to do Forex. So we focus with you on what's best for you, and we make a business plan with you if you don't know yet what's best. So we work out the options, show you the bouquet of flowers, and then we'll pick the one, and we make a real written business plan with you that you can follow and do the things as you want to do them. 3 things I put on the Top Line program, the HF stock trading or day trading program, and the new swing trading program that just came to market. And many of our traders use more than one because they paid back for the one usually pretty quick in 2 months, and so they put another one on to take more opportunities. Yeah, so what's that all included? So the first 2 programs that come with 20 hours of trading, software is installed in the server. You will not pay any server fees for that. It's all real-time data. Entry, exit, and stops are always formulated on the chart. Position sizing with the help of our Excel tables that you will get. Time in the trade pre-calculated, mostly 4 bars. And risk approximation, clear with the probability of setup. All of that and risk handling you will learn comes then like this. So this was a new student who here said, hey, these were my trades. They are entered, they are exited. I followed the system. I made a ton of money that day. I made $9,000 that day within trading 10 crude oil contracts. Not bad. He traded them 10-minute chart, was really latching on quick to the program. And here he says, I was supposed to relocate to New Jersey with my company. Forget that. I trade. Yeah, and here he did it again. Yeah, same thing. Everybody puts in their feedback charts a little differently. Here made again 20 ticks. 20 ticks on crude oil is $200. And we like crude oil. We work with that favorably. Or here you see we put it on bonds. Yeah, so we're having the trades going on bonds. That's here a 4-hour chart, swing points, and you see here with the check marks, positive trades, failure, one failure, so high probability trading as you want to have it. And here it goes on also for the ES. So you see here again swing points, sell signals. That's one of our wealth builder or income generator chart, and everything we tune to your specific needs. Yeah, so you see here with the new swing trading concept, you see the narrow target, the expanded target. That's what you learn then in the mentorship of how to follow those directions and how to put it in your daily business plan. But regardless, if you want to latch on with us, put frequent trading in, because you see it produces you 5 to 8 times more returns, but the thing you have to solve is to find the next trade. But there should be opportunities with us or without us to better your life as a trader, because it's a shame too many private investors put their money into a risky market without being well educated or equipped with the right instruments, and we want to help you that doesn't happen. So here's a very basic system. Our trade color system sells for $2,500 with 4 hours of trading and easy to follow, and you see here also there high probability trading at really easy, simple ways, and many started with this one and then upgraded later, and we acknowledge what you paid for the starter system if you upgrade for a higher system. Yeah? So putting all of this together, you need systems that give you clearly formulated returns, clearly formulated entries, exits, and stops, so that your risk and reward can be calculated at any point. Trade frequently, trade with the odds in your favor, so that you come to that end zone being a consistent trader. Yeah, so that's what I put here in the football field. You want to be a consistent trader, but it needs coaching, it needs also fish finders, and it needs a clear concept, high probability concept to follow, and we provide that to you. Yeah, so those are the 4 concepts we put on here. As we said, we work individually with you. First 2 concepts come with 20 hours of individual training. Everything is always recorded. You're recording only, so you get it recorded and you get it sent to you. So top line sells for $9,997, comes with 15 indicators, help you to make your life easy as a day or swing trader. That also comes as a stock trader, as a swing trader, or for day trading. A lot of people day trade with it. That's our new offer for the swing point system, where we follow liquidity providers that you can obtain for $4,497. Comes with 5 hours of training. Hope we got you inspired. I know those are little investments, but you know, many of the people that come on board really get a fast return on it, and then they move on to the next system, or they just move on with what they have because they're happy. I just hears it. Look, they come all with different features, what all comes in here without reading that all down, and those different features also calculate the value differently, because you're 20 hours or 5 hours, or all these indicators, they have a different value that we equip to you. All your software is always installed. You have to do nothing. It's all installed server-based on the basis of Thinkorswim. Yeah, so that's the platform we use to integrate all our NeverLoss trading charts and our software into. Yeah, so we hope we could inspire you. I also made up the time from the last presenter. If you want to contact us, yeah, contact me either on the phone number, that's the office, or even on the weekend. You can contact me without a problem. I'm reachable at contact@neverlosstrading.com. I'm happy to give you a personal introduction hour where you can go through with me different charts, different setup. Hope I can inspire you to come on board with a high probability trading system that will help and improve your trading and give it a different dimension to the ones that you most likely used, which were moving average based or predictability based. With that, I want to thank you for your attention. Appreciate your time that you stayed with us here on this afternoon, and we are looking forward to hearing back from you. Thank you very much. Bye-bye. If you have questions, I don't know, Reed, if there is still a question area open or if we're good to go to the next. Yeah, okay. Just checking. Oh, I got a note that I got 10 more minutes remaining. Hey, look. Let's play a little. Yeah, so we'll go in here. When we have a little play time, I'll wait till Reed then tells me the play time is over, and we'll look at a couple of charts. So let's look. If you traded the spider with top line, yeah, so we'll go as live as we can. Yeah, so yeah, my S key doesn't really do well here. So we pull the data. Yeah. So then you see, oh, how does the system perform? So okay. Yeah. So that's now a daily chart. So here, what did it tell? It says when the market price drops in the next or second next candle below 2 or 293, most likely selling is going to happen. And whoosh, selling is going to happen. Buying is going to happen. We kept up, and wonderful trading day we could have done with the ES on that one. And what's that telling you here? Alrighty, we're going down. Yeah. So bang, what we do, we're going down, and upside opportunity. Always the threshold has to be kicked out. Yeah. So you also always put stop. Here, sell stop limit, wish, trying to take it out. Here we go, took it out, and what's that telling you? Go long. When you did really favorably. So where are we not right now? So we have no signal. So on the spider, there is no signal, nothing that guides us. But here, these are simple ways of trading, don't you think so? Yeah, you got your entry, you got your exit. When your risk reward is okay, you take it. That was a very nice trading day on a daily. So now I play that down to the hour. And this is all live. I can't change the data because, you know, they come from the server. So in the background, you now hear also some other alerts. The alerts are system-based alerts that tell you then of what to do. Yeah, so let's go from the left to the right. Yeah, so you're coming up here. Let's make that a little bigger. Coming up here on the chart, sell signal confirmed. Yeah, so there you got a buy signal, a reversal, but not confirmed. Next day wasn't higher. There you got another sell signal, check confirmed, you're in the trade. So where's your stop? Right here at your red line. There's your entry. Did it come to target? Definitely that thing came to target. Here, this one failed. Here, that also happens. Yeah, so you got 1, 2 good ones, 3 good ones. That's already 75%. So does that come to target? I don't know from here. Well, I'll let it go. Bush, home. So you see alone here on that hourly chart, 5 positive trades and 1 failure. That's high probability trading. And this makes a world of a difference for the private investor if you go with that. And so what's going on here? No trade because you had nothing going on. Yeah. So now our favorite one, crude oil. Yeah. So crude oil. What's going on with the crude oil section? Yeah. So let me see what Reed just writes me. 5 minutes remaining. Cool. Oh, I love it. Yeah. Super. Then I can really give you some intro into a new world. So what's that thing saying here?
Yeah, sorry, that was about 3 minutes ago, so you're looking at about 2 more minutes left. Sorry.
Yeah, that's okay. That's okay. I'll take it, 3. Yeah, appreciate it. Appreciate it. No, it gives me some time to give everybody a real life introduction, not only PowerPoint charts. That's real, guys, here. Boom, boom, boom. Yeah. Can you trade that? Absolutely. When it goes the other way around, can you trade it too? When it screams buy here and you bought it? Yeah. Wouldn't be bad on. Look at that move, 47.68, and if you brought that home to 48.52, 47.68, 52, those are $900. Bading badung. Yeah, this is high probability trading. How you want to see it at your instances? Well, let's do this one. Yeah, that worked again. That worked again. This one, yeah, we're still in it because you know stop's not taken. So you're in it. How long do you want to be in it, max? 10 bars, so it still has some time to get there. But you know, nothing is 100%. But even so, you see here 1, 2 good trades. And if that fails, doesn't matter because we had so many more prior. And that's the probability thinking. You have to also manifest in it. Think in a string of trades, 10 or 20, and then you judge how good your system is. Yeah, and that works. And right now we're with crude oil. I want to show you something. So be careful with the longs. Let me do one thing. That's Chevron and crude oil. Yeah, so be careful with the longs because you know we have a pretty big gap between crude oil and the development of certain stocks. Yeah, so you see here we're still up, kind of, but crude oil went way down. So careful with the energy stocks. One has to give. Either crude oil comes up to a different price level, or you will see the market eroding. So be careful, have longs, and that's where our name comes from. NeverLoss trading, we show you protection, hedging, protection of any position. This is why that name was, because we show with option adding or with futures how you can protect your positions in a long-term hold so that you don't get hit if you're long, strong in certain things. So we can reverse it without selling everything and going on cash. So with that said, again, I hope I was able to inspire you to come into a new world of high probability trading. Here's my number. That's the office, 866-455-4520, or contact at NeverLoss Trading. We are happy to work with you on the live charts. And as I said, look, let's go through so many trades. You call the asset, you call the time frame. I'll also tell you then a couple of meaningful time frames. Yeah, I appreciate for being here with you this afternoon, and good trading, and I hope I hear from you. Yeah, thank you.